Hello and welcome back to the Gerard Realty Show. I am Damian Gerard, your host, and I'm here with Mr. Mike Mudry from USA Mortgage.
Hi, Damian.
Mike, how are you?
Tremendous.
We are going to talk about credit scores. It's kind of like the Gerard Realty Credit Show today because we're going to talk about credit scores with you and why they matter. And then we're going to talk with Brandy about how to improve your credit score because no matter what it is, unless it's, 900 on the scale of 800, it can be better. And there's never anything bad about a better credit score. So, Mike, let's talk about just credit scores in general and how the mortgage industry looks at those.
Okay.
What's a good credit score?
Well, that is a difficult one to ascertain because what's important in our world is what credit score do you have to get a particular loan program.
So different programs
will require a different requirement. So I really couldn't say what's an average nationwide credit score is. Brandy might be able to have a better idea of that.
But just so let's just say conventional 30-year mortgage, is there a range of credit score you're going to look at for the standard?
Ideally, you wouldn't be less than 620.
620.
Mm-hmm.
And if you are a married
couple... For a conventional loan. Now, an FHA loan or a VA loan, it could be different. But for a conventional loan, ideally, you wouldn't be lower than 620.
And so let's back up 1 minute because we have listeners now who are trying to go through their brain like, what's my score? What's my score? And what's my wife's score? It's my husband's score. So if you're going to be buying a house... Mm-hmm. Or if you're going to be selling a house and you're buyers,
right?
A spouse has a 620 and the other spouse has 700.
Okay.
What are you going to look at? Both or just one? Or
it depends on how we structure the loan. Because if we need both borrowers' income, then we would use the lowest middle score of the wage earners.
The lowest middle
score
of the wage earners, if they're both going to be on the note.
That's right. Most people have 3 credit scores, and we always look at the middle score. So if there's 2 borrowers, we look at the lowest middle score for the borrowers.
Yeah, and Brandy, I think, is going to talk for a minute. Brandy, chime in anytime if you want to. You're going to give us a little information, I think, in a few minutes about why you can have 3 different scores that has some sort of wide range, because everybody ought to think or generally thinks that they should all be about the same, right? So you said 620
on a conventional.
Mm-hmm. Go back to FHA/VA. We talk about those loans a lot. Same number?
No. You could go down to 580 or less, depending on the circumstances.
580 down to 620 to get a VA. I mean, a 620 down to 580.
Yep.
And then you're eligible for a VA FHA. Is there a notch below that for like MHDC or, more of a local government-funded program?
There are specific investors that we have in our investor portfolio that will go with a lower credit score, maybe even down to a 500 or a 550.
Right.
But usually they require more down payment. So, again, every circumstance is a little different and unique.
So 550 is a maybe.
Maybe.
580 is okay for FHA and VA types of government. USDA, we've seen some USDA loans recently, which we'll talk about in the future because I don't think anybody even knows about them. So let's go to the other scale. So let's say that you've got a 720.
It's a very good score.
That's a very good score.
Yeah. Credit scores can range from like 350 to 850.
Right. So if someone's coming to you and they have a 720 score, not only they're going to get the loan, but there's some other advantages to that as well.
Sure. So credit score is important in many aspects of a person's financial life, whether it's your homeowner's insurance, your car insurance, whatever it is, including your mortgage, because what determines the rate you get is the amount of your down payment and your credit score.
Yeah, it's actually amazing when I talk to lots of people in the buying and selling process. And again, if you're selling your house, you need to know this because your buyers are looking at this equation for themselves. And if they don't get the loan because their scores aren't that high, you're not going to get the sale. So a lot of people just, they don't understand how the whole system works. And I'm amazed that, like on homeowners insurance, right? The price that you pay, the amount that you pay, is very closely tied to your credit scores, and people don't always get that.
Yeah, it is interesting. And credit scores haven't always been around in the mortgage world. Back in the day, you just looked at a person's history. And that's what credit scoring does today. It looks at a number of different factors in determining that score. That credit score is just an algorithm, a mathematical formula that takes into consideration 5 or 6 different components of a person's credit history.
And the key really when you're getting into situations is that you need to know your scores. You need to know your high, low, and middle scores.
And it's important for a borrower to understand that you can talk to all kinds of lenders, and they can be throwing out interest rates and talking about things and not having all of the information on you. If they don't really know exactly what your score is, and if you're not exactly sure what you're going to put down as far as a down payment on your home, it's just a guess on their part. They're just saying this is about what rates are.
So we talk a lot about pre-approvals, and a lot of people, we advise them to get a pre-approved mortgage before you start shopping for a house. It doesn't really make sense to go out and look at what house you might buy.
Right.
It's like going to Schnucks without your wallet. You're not going to come home with any groceries, and you're not going to buy a house unless you at least have a pre-approved mortgage. So are you going to run that credit score?
Absolutely.
Or do they need to run that before they come and talk to you? Or
No, we would do that. It would be part of the process. We would want to do that. We would want to pull what we call a three-merge report, and Brandy will talk about that a little bit more.
A three-merge
gotcha. Credit report, so it gets all three bureaus. And so we would want to know what the middle score is, figure out exactly what loan program they would qualify for.
And you're going to run that report
Absolutely.
For your client at the initial consultation or soon thereafter?
Yes, sir.
And do you find that most people are surprised, or do most people kind of see what they expect to see when they get those scores?
Quite a wide range of reaction or response. Some people, didn't know that certain things were on their credit score, like maybe a nebulous bill from many years ago that resulted in a collection that never got an invoice on, kind of thing. That happens a lot.
And I, just this week, talked to some folks who are going to be selling a house and buying another house, and they saw that there were some things, and Brandy, tell me if you've ever seen this before. Something was on your credit report last year, and then it was gone, and then it comes back.
Yeah, we have seen that before. In my line of work with credit repair specifically, there are a couple ways that you can handle that. They're actually supposed to alert you 5 days before they reinsert any account. Otherwise, they're violating the FCRA.
But you may see it on one of the providers and not see it on another. I mean, it's just the whole thing is just kind of crazy how much stuff works in the background. So, Mike, when you get back and you're going to run that report, you're going to get all three of those scores. You get the scores or the whole report?
The whole report.
Because your underwriters are actually going to look at and try to analyze if someone is on the border like 639 versus 640 or 619 instead of 620.
Well, the whole report is going to show their history, whether there's any collections, judgments, tax liens, if they've made any mortgage late payments or other late payments. It's going to show all that history. And that history will that'll be the reason the score is what it is.
Right. And again, another advantage of having a higher score is not just the cost of homeowners insurance and car loans and all that kind of thing, but you're going to get a better rate with a better score.
Right. And it'll impact your mortgage insurance as well if you have less than 20% down, because your credit score your mortgage insurance is also impacted by your credit score.
So how does that work? Is there a scale that someone needs to know about, or do they
there's different tiers. So if your credit score is within a certain range, from say on a conventional loan, say from 620 to 660, there'll be one factor, and then to the next tier, and on up to 720 to, so it's tiered based on your score.
And of course, your PMI, your private mortgage insurance, is required basically any time that you're going to be below a 20% equity in the house that you might be buying.
That's correct.
Yeah. Well, that's awesome. So, So what can people do other than calling Brandy? I mean, what do they need to do before they get engaged? I mean, do they need to, start getting all these reports and start working on things? Or?
Well, what we recommend is that if somebody is interested in buying a house in the very near future, in the next 90 to 120 days, just get started on the process now. Call me at 314-503-6024. I'll do a pre-qualification for you, pull your credit report, see what all the information is, make recommendations as what you can do. If you need repair, I can refer you over to Brandy. We can take care of it all right in the very beginning.
And typically that takes, just a couple of days, or is it weeks or months in order to get that initial consultation going?
Yeah, it would be less than a day.
Can people... Can you run a credit report just on someone's verbal permission? Don't you have to have something in writing?
We would probably get some kind of email confirmation, or then have them sign something that they authorized us to do it. Yes, we would.
Right.
Yeah.
So it's not something that nobody can have their credit report run if they don't authorize it.
They could go online and authorize it through my website. Right. They could do that as well.